All right, gonna do my best out here today. We've got a very interesting point in the market I want to show you, and so we're kind of at the crossroads, so to speak here. But let's get started here, and we'll go into that in just a bit. Give it time, Ron. Give it time. All right, disclaimer: you can lose money. Trading involves the risk of loss of capital. Make sure that you don't take anything here as intended and construed as any advice at all. It's just for educational purposes and show you the kinds of things you could be looking for. You have to make the decision whether any trade is worthwhile to you and that you could stand the risk associated with that. A little bit about me. I'm basically an ex-U.S. Air Force fighter pilot with master's degrees in both computers and business. I've been an active trader since '98, full-time since 2009. That's 10 years. I can't believe how fun flies when you're doing time, huh? All right, I'm a technical trader, but I do look at the fundamentals, and I do provide mentoring out there for people who are so interested. Stick around to the end of the presentation. I have a special offer from Rick Sadler, from Doug Campbell, and from Ed Carter. All right. Our agenda, we're going to go over the economic and earnings calendars. Going to do a quick market overview where I think where I show it where it is and where I think it might be going. Some trade ideas, and there's the ones that are just a little bit on the skosh side there. Q&A, not specific, and then time permitting, we'll have a look at your individual stocks. One only, and please let me know whether, but don't put any of them up until I put the cross lines up, please. Economic reports. We do have nothing on Monday. Jolts at 10 a.m. after the market opens on Tuesday. PPI and the petroleum report on Wednesday. CPI and the jobless claims on Thursday. And then we got a full set of 4 on Friday, 2 before the market opens, retail sales and import-export. I think that retail sales number will probably be pretty darn important as kind of a gauge of the consumer, because we're riding the backs of the consumer here at the moment. XM prices will probably be a little bit important, but less so. Business inventories and consumer sentiment are going to also be important. All right, let's step on. Earnings calendar. Whoops, this is last week's. I will apologize for that. Let me bring up. Whoop, nope. Earnings. Here is the earnings calendar for the week. Very, very light. None on Monday. 3 on Tuesday. And we have 4 on Wednesday. All of them are... Ron, I didn't look to that, but I can. That are relatively high short interest. GME in particular has 58%. That's more than half of the float is short out there. And we'll take a look at that if we want to. ACE, we got 4 on Thursday and 1 kind of laggard here on Friday. All right, let's go back over to look a week ahead, and I'll repost that one later when I update that chart. I somehow skipped it. Here's our trade ideas for the week, and we'll go over those in just a little bit. I did post that to the room. Let's make sure we add it again. Well, it's not wanting to go. All right. Let's do this. Click on it. Channel chat. There we go. All right. Let's go back to the market overview before we get into those. Here we we go. All right, this is the S&P 500. Let's go back out to a 6-month chart. This is the all-time high around 30.29.5 up here. We're what is it, on Thursday? We broke out of this 29.50 area. I've been watching this 2800 to 2830 level up to the 29.50 level. Yes, it's 150 S&P points, which is quite significant, but we broke out of that, and as some of you are probably been here a while, you notice that I use Stochastics RSI 7733, and once we get up here above this, I say 85 to 90 level, then we're in possibly a pullback zone, and we're getting a little long in the tooth, but the strongest of the strong markets to continue to climb the wall of worry. Some people were looking for a pullback on Friday. I was saying that we actually probably going up towards 3,000. If you also see here, I use volume at price, and one volume at price level is right here at about 29.80, and the next one's up here around 3,005. So could we go up a little higher until I get a good solid closing cross downwards? I still think we grind a little higher. It wouldn't take us much to get up 15 points in the S&P. All right, let me go zoom on over here to oil real quick. Oil kind of in its own, try to make a bottoming pattern in its own trading range from all the way down at 51 up to 61. So yes, pretty wide range, $10, but considering what's going on in the world out there, I'm not surprised that it's doing that, but we're kind of doing a bottoming pattern here. I'm seeing that we're kind of, setting higher lows. We're not setting higher highs, so we basically got a rising trend here at the bottom and a decreasing to flattening trend at the top. So we're going to break out of this wedge at some point. Will we break out above 61? I have no idea. Will we break down below 51? I don't know for sure, but I think not. We do seem to have, over the last couple of years now, some sort of ceiling around 50 to 52. Sorry, floor around 50 to 52. Gold got up there to 1560s and then is pulling back. We still probably have a little bit left to pull back in. If you look at the consolidation that we went through in July, then it made another move higher. I don't see a lot of inflation out there, so it's not inflation related. It's probably nerves related. Dow looks a lot like the S&P. So the same criteria holds, different numbers. NASDAQ looks a lot like the S&P. Now the one that doesn't look like the S&P is the Russell. And this one has been the laggard for years, really. Occasionally it'll spurt to make a catch-up when investors, and I don't mean traders, but investors then rotate themselves back into the small caps. We don't get over 1525 to 1550. I'm really not interested at all in the IWM or the Russell, except looking for shorts. So this would be where I'd want to be pulling shorts from if we top out in the markets, rather than anything in the other indices. VIX down at 15, so we did a spike up end of July, first part of August, and now we're just kind of settling back down. And you know what happens is there'll be some sort of exogenous event that causes everybody to get excited, and then kind of like the waves lapping on the bathtub or in the side of the pool, it takes a while for it to subside, and eventually it settles down to around 12 again. Well, I think what's going to happen is we're going to bounce around a little bit. We'll settle in 12 to 13 range for a while. Then we'll have another event that'll splash us up back and then whip back down. So, okay, let's go to. Here we go, the trade ideas finally. Bed Bath & Beyond. Well, why don't I just zoom on over here to the charts in TC2000. And let's go over to the longs. I'm going to put them in alphabetical order, starting with the ones that are actual trade ideas. Bed Bath & Beyond looks like it's around about a breakout. Broke above the 50. Notice how it kind of is doing a stair step here. Little move up, pull back as it fights the downtrend there. Move up and then kind of a gentle pullback as it kind of hugs the 50. Now I think we're in the next pull up. Where are we going to probably go to? Probably 12.5 to 13. Somewhere in that ballpark. Is that enough for you to trade? I don't know. I do say that I have found a little bit difficult to find absolutely wonderful trades this week, Friday the 13th. Yep. Here's one that could do a 45-degree runner with 9% of the float short. So let's watch for a possible 45-degree run. On the downside, we're sitting right here where prior swings were. Doesn't mean we can't break it, but especially with a high float short. And going into earnings where it went on Friday, it was lackluster support from investors and balance of power. So I think we could do a run. Let's keep an eye on that puppy. Could it do a pullback first and then a run up? Possible. I'll show you some examples here in just a minute of what I mean by the 45-degree run and the fact that it could potentially pull back first. The other was Mylan, another round and bottom breakout. Our first target would be somewhere around this 2180, which is the prior swing here, but it also has something to do with this downward move and bounce, this bear flag over here back in May. But once we get over about $23, there's very little to stop us between that and 26. So I'm going to keep this on my radar scope for a few weeks to see what happens. Will it be this week? Possibly not, but we'll see what does happen. PDCE, oil and gas exploration, kind of bucked in the trend, round bottom breakout. Doesn't look like very much distance between here, but from Friday's close up to the 200, which is one of the targets, is almost 13%. So would we really be wanting to go? The 200 kind of matches somewhere around where these highs over here in July are. Another one that comes up here, and I'm going to, the first thing I point out is I go, yes, I like the fact that it's bumping up at 43 and it has 18% of the float short. I am not going to play it until after their earnings on Tuesday after the close. So I'm always aware of when earnings are being reported, because I don't want to get stuck and have this gap all the way down if they disappoint in any way. I'm going to guess that it's going to, that somebody knows something, and this is probably going to move up into the gap, and a lot of those who are short are going to get their head handed to them. Now, am I absolutely sure of that? No. If I was absolutely sure, I wouldn't be telling you, and I would be putting some of my money into it. But I'm going to keep it on the watch list, and we'll see what happens, see if we can play it. XPO, logistics, very interesting. I'm going to show you the IYT, the transports. And the transports weren't doing very well until Thursday, Friday. And Thursday, Friday they did, and it looks a lot like XPO. So some of these, C.H. Robinson Worldwide. Let's watch and see if we get any kind of trade agreements that come out in the next couple of months or so. These things could get a bit of a pop because they have not been participating with the markets at all. All right. Okay, I'm going to go over some ones that we had on prior weeks. Last week we were talking about Cloudera. Cloudera had a nice move here, but I think it also had earnings maybe on Thursday, so that would have been a tough one to play. But it has done a gap fill. And even after the earnings, it did what? It moved almost 8% in one day on that second day. So just because you get a good big gap up doesn't mean that the move is over. A lot of people are telling me in the trading room, "Oh, I can't go after this. I can't chase it. It's gapped up too much." Well, where's resistance? How much the float is short? Those kinds of things will play into whether it can run or not. Another one that we were talking about a couple of weeks ago was on Mastech MTZ. Example, 45-degree runner. Basically did a big, huge move up on earnings day. Basically did a doji type continuation move pattern on the second day, and then moved up raggedly to follow the 8 and the 17 exponential moving averages northward. Okay, even if you'd only gotten in right here and you stuck with it, you'd be up 9.5% already. So just because you get that big gap up and big move on the earnings day doesn't mean that it's too late to get in. You just have to be careful. Now, could we have been spooked out on these two periods where they did a pullback? Absolutely could have been. Stamp. When it came out here, I put up that it could do a possible 1, 2, 3 continuation, but it had to pull back first. Don't know what the short interest was, but that could have had a factor in it. How far did it pull back? Well, let me put a quad line up there real quick, and let's see. It pulled right on back to about the 50% level, and it stopped there, and it made the turn. And our 45 became really probably about a 30-degree angle. But I still think that we've got higher to go to 70, 75 plus to get up here to fill the gap. So look at possible pullbacks as potential long candidates for Stamp. Won't be probably early this week. It may be late this week or the following week. Twitter, I pointed out a couple of weeks ago that we were doing a bull flag. I went long back in here on the move up over the bull flag. Took off partial profits when it got close to 43. It did a pullback against me. And I got out and I got back in on the breakout and played it for 2 days, Thursday, Friday. And then took my profits on Friday because it's getting a little long in the tooth, according to my stochastics RSI. Just because you get in doesn't mean you can't take partial profits, and doesn't mean that you have to stay in forever. And US Foods did a 45-degree runner. I was looking for the breakout here, did a pullback. Now that pullback was not even close to probably even 2/3. Let's do the quad lines. Oh yeah. That pullback was, yeah, right at about 25 to 30%. So that was telling me that we were likely to continue to go higher, and sure enough it did. Where did it go to? It went to prior swing levels. It's starting to run out of steam here, so don't think of USFD as anything more than educational. That look and find out what prior swing levels are, find out what the resistance levels were, and right in here the prior swing was right in here around 39, and play the pattern. All right, let's go look at some shorts. Really slim pickings here. OKTA on a break below about 121. How about some liquid stuff? Does that mean does that mean drinks or does that mean oil? Anyway, OKTA, I think it could come back into the 110s or so. You could probably get one or, yeah. But we can ride this wall of worry for a long time. All right. So on a break there's possibly some support here around 118. But if I get $3 to the good, that could be. Now another thing is if you get a punch down and then a bounce back, and then it rolls over, maybe on the hourly chart or something like that, like it did right here, that will give us a good opportunity to get short. In fact, for those who went short right here around 124, they're already $3 to the good. That's what I'm looking for, is a move down, bounce back, and then roll back over on just about any of the shorts. Tivity looks like it may want to try to go. The balance of power has really changed here. This was marked up back in here when we had good bop. Now the bop's kind of dried out, and I think an intermediate bounce level around 16 with somewhere around $15 as an additional target. EYE probably would love to get an intraday bounce here on maybe the hourly chart or a 2-hour chart, where it gets back up in here to the 28 level and then rolls over. And then we could use this $27 level as target number 1 and target number 2 down at 25 something. Not everything does. Oh, thanks, Bob. Yeah, because I played the weekly options on Twitter, because I wasn't going to hold beyond the weekend. I made 150% on the first batch. Unfortunately, I only had 4, and I made 200. I want to say 250% on the second batch when I sold. I still left money on the table, but I was quite happy about that. Now we got one. Oh, Vive. I didn't cover that. Vive, I think, is going to fall right back down into this trend area. We bounced off it once. I think we go back down. We may not. The balance of power is telling me no, not so fast. So we'll have to see. If it breaks, say below 155, it does fall into here to the midpoint and maybe even to the bottom. One to point it out 2 weeks ago was Overstock. Then it went down to the 50 and did a bounce, did a bear flag. I was thinking that it was going to stop just under 20, but it actually went up to around 21 to 22. Then rolled over and had a hard sell-off day with the markets. Went down to the 100-day simple moving average. And even though I don't play any of the moving averages as points where we will, to get in or to go short or go long, others are not so negatively inclined. They will potentially go long at the 50 for a bounce, and the 100 is used by a lot of hedge funds. They'll watch the 50, but they'll try to pick it up around the 100. Well, if you notice, the 100 turned out to be right around $15, and we had some sort of technical support over there. Will that hold, or will we have to go back down to 12 or even 10? I don't know. V Sharma, we're not looking for any stocks yet. Not yet. Okay, let's go back to our look at trade ideas. All right, I did say that we would have a special offer for you guys and gals. There's a 60-day trial offer for hit run candlesticks or right way options. $49, less than $25 per month. You can't beat that one with a stick. And what if we like you all after 60 minutes? Well, then you could ride out the rest of the 60 days and then join. I think I found this room after bouncing around with a number of different, this set of rooms. I bounced around for, upwards of I guess I could go back even 10 years into the late 90s. And this is by far the best room or set of rooms and people, traders that I've ever been associated with or known. Bar none. They're good people. Not trying to rip you off. I mean, there are some people out there that are they're Charmans and they're trying to, and charlatans, they're trying to rip you off for $1,000 at a whack. You don't see that here. All right, if you want to follow me, I post what I can in stock on StockTwits with Top Gun Trading, so you can try that. Now I'm less inclined to post any of my short-term intraday trades, except as learning points. I get slapped around the head and shoulders by people who say, "Well, yeah, it's easy to cherry pick when it's after the fact." Well, I am not going to post stuff that I'm in, that's a day trade or whatever, because I don't want anybody to jump in too late and not know what the game plan is. So I'll post all of the stuff, the information after the fact, so that you can learn, and when you see it the next time, you may be able to apply it for yourself. I do post things out on YouTube. Mainly the look at the week aheads now, but occasionally I post some other things. I do have some other videos that are out there. I used to have a futures room. I do have one out there for futures if people are interested in those as well. And you can follow me on that YouTube if you want. All right. Now, not stock specific questions. Do you have any questions on the chart setups that I have, the patterns that I'm looking for, anything about what I'm use with volume at price and Thinkorswim, or anything about TC2000? I'll leave that. I'll wet my whistle. 1, 2, 3 setup. Are you talking about? Are you talking about the pattern? The 1, 2, 3 setup? Okay, let's go here. Okay, 1 second, I'll find it. All right, here's a good example of a 1, 2, 3 setup where you have 1 is the big, huge move up. 2 is where you say, okay, I need to digest that move. I need to consolidate a little bit. And it could either, this is an extremely bullish one. I don't care what the color of that second candle is. I really don't. I'd love for it to be bullish like this one is. So then if it gets over that and somewhere up into the candles here, I could go long around 58.50. All right, so it's a 1 move. Let's see here. I'll have to put it on repeat. 1's the first move up. 2nd is the pull back. And 3rd is the move up, which in this case would be on the 3rd day. That's this. Take the repeater off. Delete that. Delete those. All right. So where would my stop be on that on Mets? That's a good question. What I'm going to do, let's see if I can get rid of that one, that one, that one. Drawings, bench. Okay, hold on, let me get rid of it this way. Delete. All right, and delete this one. All right. What I would use is initially at the beginning of the day, on the entry. I'm going to use, traditionally people will use all the way down here below the low of the 2 days, either the day that I got in or the day before. Well, I'm going to have to give it some room, but if once this thing starts moving pretty high, like above 59, that stop's going to move upwards very rapidly to as close to break even as possible, but probably just below it. And notice what happened on the 4th day here. Day 1, day 2, day 3, day 4. We had a little bit of a retest where they tried to go shake out the weak hands. And if you raise your stop too high too fast, you'll get shaken out and you'll miss the move. Now, the one that's going to be very, very difficult to stay with will be this one right here or that one right there. Now, this one right here was nice and easy to stay with on the pullback, so was this one here. But these are a little bit disconcerting because you see a lot of your profit disappearing. So what I'm considering is that I'm going to march this up. I'm probably going to use an hourly or 2-hour chart. There's the hourly chart, and you can see where. Okay, hold on a second. That's the daily, hourly. Here's how we gapped up on METS on the 2nd of August. Can I go back that far? All right. Here's where we went back. Let me move this back here. Now, we're on an hourly chart. And initially, my stop would have to be down pretty low. And most likely, my stop, I've used the volatility dot as exactly where I would put it, but it's not because of the volatility stop. It's because that's the low. So probably below that twist there, give it room. Didn't get too tight here, didn't get too fancy. And then once it moves up, I can start crawling it up, crawling it up, crawling it up. Move it to right about here, then move it right about there. And then I've got to think about taking partial profits. And then I can use a stop where I use a wider stop. I didn't tell you to use VWAP as the reference. No, Rick, I don't. I played around with it a couple of times, but I could never make it work for me. I know people that are very, very successful using VWAP. I just haven't been successful. There's a number of things. My first time looking at balance of power, the way I tried to apply it must not have been the right way because it wouldn't work for me at all. Now that I've listened to Doug, he's taught me a different way to look at balance of power. It's kind of a secondary indicator, and it actually adds value. You're welcome, JJ. Now, will I use, you're welcome, Rick. Now, will I use, let's get back here. No. Crude oil VIX. Okay. Let's go here. On the major indices and on large cap stocks, mega cap stocks, I will use volume at price as a possible place where we want to go. The 3005 did not come out of my backside. It's this number right here, which says that one of the highest volume price levels, combining all of these at 3005, was right here at this level. It's volume at a price level. It's not volume on a day, on a time basis. It's on a price basis. And you notice that we went and we had trouble getting through this 2940. But then once we got above that, that's why I had 2980 as a target. And now I've raised my target to 3005 or so. But I'm aware that this 2975 to 2980, we could stop here. We could roll over. And I'm going to watch my secondary indicator of the stochastics RSI and see if it rolls over. If it rolls over, then this will be all she got. Oh, yes, Brian. Long ago, in stochastics, I played around with stochastics, and they didn't seem to add any real value to me. Again, I'm a very short-term trader. Even if I swing, I'll swing anywhere between 3 and 5 days max. Sometimes on an hourly chart for a couple of days. So I'm a very short-term trader. So 7733 works for me. Will it work for you? It may not. But I found that the 7733 stochastics works very well from a 5-minute. Yeah, thanks, Ed. On a 5-minute all the way up to the daily. And even on the weekly chart, if you see how these things do the oscillation there, let me take this on a weekly chart. Well, maybe I should take it to a 3-day chart first. Notice how the oscillations kind of dampen out. Now, if I take it to a weekly chart, they really dampen out. And they're less dramatic, but you can use them on a weekly chart. But I normally use that setting. I just keep it the same because it's secondary. It's not the thing I trade primarily to say, oh, I'm getting a crossing here on stochastics. It's time to go long or short. Bob S. Stochastics. Stochastics RSI is a stochastic of a stochastic. It's a stochastic of the RSI. So it's an oscillator of an oscillator. That's the easiest way to explain it. To me, I don't need to know how it works, just that it does work and how to apply it. I've forgotten most of the stuff. Maybe I'm just slow or I'm a bit thick. I definitely know that I've killed a number of brain cells and I don't have a whole lot left. And that I basically, for every bit of data that goes in, I've got to dump at least 1 or 2 bits of data out. So I tend to say, oh, well, this works. And I get down to the math level and understanding it. But once I find out what works, I forget and dump everything as to, well, how did I come up with that? And I really have to think long and hard sometimes. And it gets embarrassing to say, well, how did you come up with this? I went, well, let me think about that one. Okay. Yeah, well, brain's full of something already anyway. All right. Let's go back here. We have any other questions up there? Okay, Bill Bowers had the question there. Do you know of a way to use some of the TC2000 scan codes in TOS? For example, Doug showed the 3-8 cross, da-da-da. Well, let me see. There are see here. I know I found it the other day. Browse. Computer, new desktop, trading. Okay. Ed, do you mind if I post anything about your candlestick scanning guide and logic formulas or not? If you say no, I could understand. I know if I post it out here, don't ask Ed for questions. He's too busy to help you do something. But it's up to you, Ed. I won't post it unless you tell me it's okay. I probably should have asked you first. Rick W. wants to know, how do I get the daily average true range in TC2000? Well, if you're using version 19, average true range is already built in. If not, if you're using a prior version, let me Gotta find it. Okay. All right, where's Trader TC2000 stuff? There it is. All right. Here's how I came up with average to range. I used 14 because I pulled it off the net. This right here, the first one is line is the label. And the second is actually the calculation for 14 days. And if you go within TC2000, the indicators here, add to plot. Average to range, I have ATR as a PCF that I created, that one that's 14, but you have it as a native indicator now. And when you do that, you could then go in and edit it and pick out any number you want and put it. Now, it only puts it in as a plot. I've not figured out a way to add it into, well, I guess there are ways you could add it in directly into scans, but the PCF that I just gave you is probably better. Okay. I can show you one. All right. I'm going to give you one, and again, this came from somebody. This is my there we go. Rick W. This is my 2-bar low reverse, the kind of a J-hook scan. And if you want any support for it, I'm not going to provide it, but I'll provide this for you for free. And there's the stochastics RSI length. And then average to range. All right. Now let me do this here. Richard Funk, my stop is a technically based one. So my stop is going to be somewhere underneath. It has nothing to do really with directly with the vol stop or average to range, which is this one, the volatility stop. That's where that would be put. But a lot of times the 1.5 volatility stop is where I would normally put my stop. So let me go to the hourly. And I'll go back over here to the left again. And where I would have put the stop when I first went in would have been down here. And then it would probably move up at the end of the day to somewhere around here, because I'm looking at the move up, the doji, and then this continuation move. And even though the day finished up here where the green line is, I need to give it some wiggle room, but it's technically based off the candles. But It happens to match a lot of times where the average true range is, because a good 85 to 90% of the time, one of the ways of using this average true range volatility stop is to look and see where it says you might want to put a stop, and then look and see if you can find anything that technically supports that. So this one says it should be right about here. Well, that's at the end of the day. I probably want to keep it below this level here, the prior day. And then once we get up into here, I probably want to move it up to below here, and not, well, they said to leave it here. Once we move up there in the second day, they move you as high as 58.50. Well, I want to give it some wiggle room if I've already taken profits for one. But it's really up to us to decide where we put the stops, and I don't do it on a mechanical basis based on any indicator. It's all based upon the candles, price level. Now, the vol stop, the ATR stop, is based upon candles, but it's not exactly the same as what you and I would do by eye. All right, let me see if we've got any other questions here. Yes, they're TC2000 start to do their rounds. They come down here to Florida. You're welcome, Richard. Oh, it's unfortunate, Val. Hopefully you didn't have too far to go. Okay, let me see what we're going to do here. All right, I just put up the cross line. You can put up your symbols, one and only one. Tell me whether you're looking at a long or a short. And we probably got about 15-20 minutes here. All right, I'll take that down. I'll take out the TC2000. And Bob S. wants to look at Snap. I'm going to assume you're thinking long there, Mr. Bob. Well, what I'm seeing here, let's see, it's trying to break above this downtrend. Now, when I draw lines, I tend to want them more, that's going to get ugly. What I tend to do is I tend to want them to break price levels. So let's edit, set default, green, okay. Right. I'd probably want it to break above $17, although I could see you going long before that. Notice the balance of power has really dried up quite a bit. And I don't know, so it's not supportive, but I don't have to have it. And if I were to use a regression channel here, that's pretty much the channel I see that it's in, somewhere around about in there, and it's broken above. If it breaks that and the $17 level, I think it goes to 18, personally. Okay. Jabhat Malru wants to look at PFE on the long side. Well, it is kind of a pinball setup here. And pinball is where you go down, you make a kind of a double bottom, and you start to go up towards the 34. You notice I've already got a line here at $37.75 and maybe $39, so call it 38. It's changing character. If I look at the EMA only chart, let me go here and edit this and take that away and only look at 2. Yeah, we're getting a change here. Does that mean that it's going to follow through? Well, first level of that's got to get over is about 36.75. Then 37.75, and then 38.75, and then 39.75. So about every dollar there. So I would wait for a pullback. maybe a gentle pullback of 50 cents, 75 cents, or a dollar. And then when it does that, and it curls back up and gives you another buy signal, you go long there, potentially. JJ wants to look at Dub. Weight Watchers. Weight Watchers did a move up on earnings, then a pullback, and then it basically did a 45-degree runner. Again, I'm going to wait for a pullback. It's, you know, it moved from $20 to $30, 32 in very short order. It has to digest that move. All the short-term traders have probably taken a position, whether that if they were short, they've covered. If they wanted to initiate a long position, they've probably done so. Now it's going to take a while. It's going to kind of grind. So I wait for a pullback before I would jump in long on Weight Watchers, JJ. Charles wants to look at Domo long to recover. Okay, let's look at Domo. All right, Charles, are you looking at trading Domo just because you lost money in it last week? I'm going to wait for your response. Okay. I'm going to be totally blunt with you, sir. That is an extremely dangerous way of thinking about trading. If you want to make up for that loss, what you have to do is analyze what went wrong. Maybe you didn't do anything wrong. But if you did something wrong, learn from that. And number two, go find something else with a good setup and make the money back that way. No revenge trading. That I learned long ago. If you try to go back, and don't try to go back to the well where you earned money. A lot of people, they'll make a good profit on something, they'll go back again, like I did Twitter, but I did it again because the setup was actually on its own, was good. But I wasn't necessarily trying to use Twitter to repeat itself. It was just a different setup, and it worked. But be careful. There's a fine line between revenge trading and trying to go back and recreate the good feeling you had when you had a winner before. Make sure it's set up. Now, Domo, could this one try to recover some of its fall? Yes. Let's look at where the moving averages are. Does this look like it's in a upward trend or a downward trend? No, it's in a solid downward trend from April. Now let's go look and do an analysis of should you have been long, and where in here could you have gone out of it. Well, let me pull up the Heikin Ashi. Well, Heikin Ashi is something that Doug has kind of rediscovered here lately. And anything on the Heikin Ashi that's below does not have green dots. Green is long, red or brown dots avoid or go short. This one was telling us from April. This was not one to go long. These were counter trend trades, or counter trend moves, I guess, not trades. These were counter trend moves to look for a reversion to the mean to go short. Where when we bounced up to here, time to go short. When we bounced up to here, an opportunity to go short. We went up to here, opportunity to go short. When we got up to here, reversion to the mean, opportunity to go short. Maybe. Again, it doesn't move that much, although now it's at 11.8%. The ATR before the big move down was a lot less than that. So the number one thing is avoid getting in these in the future, or get out of these if you got in. Find a way. Take the loss. When would this loss of what, $10 basically on Friday? That looks really ugly, but it looks less ugly compared to only maybe a $2 or $3 loss the day before. So yeah, I mean it's really no. I don't use Heikin Ashi. I've only put it up there recently, and when I get into these longer term charts or something like that, I'll bring them up to look at. Like Costco is a longer term trade. And notice how it's above the green dots. This was basically a no-brainer to stay long. Here, probably time to take profit. When do you get back long? Probably when it went over 282. But I tend not to use them like Doug does. But take a $49 2-month trial and come in there and ask him and say how to use Heikin Ashi. He also has a 1-hour video that I think he's got posted to his Right Way Options room on YouTube. Okay. I think that's if you use it. And let's try it real quick. Ah, come on, baby. There you go. Will. Oh, you're welcome, Charles. That's only a brief idea of what we try to do every day in the trading rooms. No. Well, let me see. All right. Let's see if that works here. All right. Okay. This is about Heikin Ashi. If you want to know, give it a shot. All right. I'm going to go back up here. Tandem, long. Potentially. If you got yourself over the 70-50 level, I think it's setting itself up based on my stochastics RSI. But then if you get long, you got to make sure it continues to move above 72. And my first target would be up around 74. So it's okay. It's not the best setup. It'd be best if this J hook was forming above 72. But I've seen a lot worse. BX long, we were talking in the room about BX. Here I'd be waiting for a pullback. And if it moves up here and pulls back maybe to this breakout level here around 50, I'd be looking at that. Bizun Adam, BZUN. I see kind of what you're looking at. Balance of Power is screaming at me saying, watch out there, fella. And what I'm seeing here are, I'm basically going to take the tops back here and extend it. And let's take, I need to set it to default. Okay, you're in kind of no man's land under Bizun, the Baozun. the move, the gap up here on Thursday probably would have been better. Now that it's gone up here, you're in no man's land because your stop's got to be all the way down here around 45 or so, or at least down to 46 something. And you could run into resistance and sellers at 50. I'd wait for either a breakout or a bounce up there and pull back and then a breakout, or a pull back here, consolidation before it gets in there. I wouldn't touch it at a long. It might work, but there are, again, there's no guarantees in trading, but it doesn't look all that promising. All right, David B wants to look at Cisco. Did not say long or short. I'm going to assume a long, and you're probably going to figure out what I'm about to tell you. We've been in a solid downtrend. We aren't doing a bounce, but this is probably no more than a reversion to the mean unless we can get over 49.5. And then we've got this consolidation above us to worry about. So that level right there is going to act as resistance, and so is this. I think there are better stocks out there. I don't like stocks that are in a downtrend. No. Now, if it changes somewhere down the road, I want stocks that are making higher highs, higher lows, higher high, higher low, higher high, higher low. I could ride those things will usually work in about threes. Now, not always. Sometimes it's more. Sometimes it's less. But usually it works in the threes. So what I'll want to do is I want to see this EMA form like it did back here. I'm going to bring up the 3 here real quick. And you see how it went up, pull back up, pull back up, pull back up, pull back. I don't like to focus in so closely on that because I want the big picture. I want to find stocks that are in an uptrend and find them by a pullback here or a breakout. Okay. All right. Cisco's in a downtrend, doing a reversion to the mean bounce. Stay away from it is what I would recommend. Sorry, that was what I would do. Roger A wants to look at Procter & Gamble as a long. Yeah, a defensive stock, but you're going to need a pullback first. Now, it's had 1 move up, 2 moves up. Is that a third one, or is the third still coming? I don't know. There's nothing magic about 3, but I'd love to see it come down and test the 17 exponential or consolidate to the right a bit. Let's look at an area chart. Okay, Roger, how come you weren't screaming at me back in December and January? We moved from 90 to 123. It's been a really nice move. I didn't participate in any of it. Reggie King wants to look at Wing. W-I-N-G. Is it Wingstop? We've got one down the corner from us. You're going to probably figure out what I'm going to say here. See how the moving averages really are just now got a cross down. And when I get an 8/17 cross down, that means that we're getting kind of weak. Unless we do an immediate turn back up, this looks like it wants 88, 89, maybe 90, that kind of stuff. So I not even noticed the 50, but we went down to the 50 and did an artificial bounce. If I look at a 2-hour chart, did a move down, basically a bounce up, move down. I could see us bouncing again or pausing a little bit, but I think it's going down to 90. I would not think of wing as a long. Bob S. I think you already mentioned Snap long, didn't you, Bob? Okay. You were correcting the lack of the long on there. Uber short, UBER. We're getting a little late here. I'd like to see a pretty good sized bounce in Uber first. Kind of like what we saw here in mid-August. Maybe a bounce up to 33.5 to 34. And you might want to take a look at, say, an hourly chart and see if we can get a reversion of the mean bounce. I see where you're going. And well, let's see, where is that? It's only $1 lower, but maybe that's enough for you. You'd have to figure it out. The pattern's set up to go lower. Now it's a matter of, can you get a good entry and good risk reward? Now, if it goes lower to 31.75, your stop's going to probably have to be over 33.35. And if you think that they might stop at 30.61 for a double bottom, that may not be enough to reward the risk. Mel, Apple long. All right, remember what I said in the intro that I used some fundamentals as well? One of the fundamentals is that kind of a seasonal trade for Apple is buy the rumor, sell the news. When you buy the rumor is Apple iPhone and whatever launches. No more stocks, please. Historically, it runs up into a new product release, and then it sells off on the actual event. So with it coming up this week, I would suspect that we're going to see some weakness. Overall, Apple did very well until we got back into this October time frame, and we basically did an inverted head and shoulders from here, here, and here. Now, it didn't continue up. It pulled back there and is doing another little mini head and shoulders. That didn't work. Is this what this is going to do? Maybe. I don't know. So if I go back to the daily, this is a sloppy chart. Got lots of gaps, and there's a trend, but it's not solid. If I go to a 3-day chart, it's a little less choppy, and the weekly is even better. But I wouldn't be thinking about going long ahead of their announcement. After that, then you try to figure out what's going on. JJ, did you look at the WW? We did. Jonathan B wants to look at VMC. Probably one of my favorite chart. No. Sorry, not VMC. Vulcan Materials. Oh, I haven't looked at that in a while. Wow. You could try to play the breakout if you did here. I have more success on pullbacks. And let it do a little bit of a pullback and then a move back up. Maybe do a little bit of a J-hook. Let's just say that it move up here, it pulls back, and then does a curl up. And the reason I like to do that, I've got a tight stop. I don't have to put my stop down here, and I don't have that kind of stop. And then I've got a target number one already set up as the prior swing high. So it went up here, it pulled back, kind of did a double pullback, but my first tried to go long would be somewhere around in there. That's the first way to take profit, and then try to ride it up. All right. Yeah, VMC looks pretty decent on a pullback. UNH short. I sure hope you're wrong, because I got some UNH long, but in fact, it's pulling back. This is a long-term hold for me. I've got some Is it 2021 leaps or 22? I don't even remember. I've got leaps on those. My wife is in the insurance business, so I think there's a lot of undercurrent going on. Every time we get up and do reversion to the mean around the 17, it's been rolling over lately. So I see what you're saying. We did a higher low here. That's the only negative about going short. So your stop would probably have to be above 235-ish. I see what you're looking at, and balance of power is negative. And there's a lot of undercurrents, especially if the Democrats take control of both houses and the White House next election cycle. They're probably going to have some legislation that hurts the insurance companies big time. So, yeah, that's kind of a techno-fundamental view of the world. Bill Bowers wants to look at NOC. NOC is consolidated. Back here, I did a Fibonacci expansion, and it went right into the 100% expansion. It ran into a brick wall. Let me show you the 3-day chart. See how it's consolidating there, and then the weekly. That weekly is starting to look a lot like a pop out of the box candidate. Area chart, yeah, the same weekly, same. Let's look at EMAs, flattening out. I see kind of what you're looking at, but this consolidation, I want a breakout, probably a pullback and retest of that breakout level, and then move higher. That would be what Doug would recommend. And in this case, because we've had this consolidation for over a month, or about a month, I'd probably do the same. This looks like it's probably a little long in the tooth. See how we've had this big move up from below 250 to 365. Holy smokes. That's December, January. Moved up 143 bucks, 62%. Yeah, it's probably a little long in the tooth. Doesn't mean it can't go higher. Take two. Take two was on my list last week, but I'm seeing it kind of running out of steam here. It's flattening out. Kind of did a double top there. I'd want to use either a breakout or a breakdown. Maybe if you use the 3-day chart, it still looks okay. And the weekly still looks okay. But the daily does start to look like it's starting to lose its upward momentum. I'm not going to say rollover. Bob J wants to look at BWG long. Briggs and Stratton. Oh. Well, you're in the gap. And there are people that are saying that you will fill this gap. I'm kind of that persuasion, but I'm going to want it to do something first. I'm going to want it to come up here, pull back, and establish a higher low and do this little J hook first. Then I could actually go in this kind of counter trend. But normally I don't like to go after stocks that have had a big gap down. One of the fundamental reasons for not doing that is back in here, I'm guaranteeing you that the company was not warning investors that they were probably going to miss their earnings targets or something, and that's probably what I'm assuming that's what this is. It's an earnings miss or a reduction in guidance. Big institutions don't want big surprises, negative surprises, and they're not going to be forgiving anytime soon. What they're probably going to do is they're going to want to go another quarter. So the best that's going to happen is probably a move up to about $8. But if you get this higher high, higher low, That will tell you that it's probably going up towards the $8 level. It's not the my most favorite pattern, to say the least, but they do tend to work sometimes. So let us come back again and tell us how it worked. Macy's, same kind of thing. Watch out, Macy's. The 1675. It's going to take some effort to get up to there. Then it's going to probably have to zigzag, higher high, higher low. We got basically an equal low here. I'm going to see a breakout and make a higher high, higher low, and then curl back up and give me a buy signal. I could think about it. But right now, I wouldn't do it. Charles, your stock of Domo, whether to dump or not. You're probably going to get 2 or 3 days down or sideways. You may get some people that are value hunters trying to come in and get it up, but I'm not sure. Okay. Greg's trying to sneak in 2 of them. I will not let him do that. Illumina was your first one mentioned. That's one I'm going to look at. And I think you said long on that. Again, downtrend. There are no buy signals here. You're making lower highs and lower lows. Definitely not long. Look at this. The 2 EMAs there, the 8 and the 17. And nothing bullish about that at all. And I'll leave it at that. All right. Nirav Patel wants to know about Las Vegas Sands. Well, Las Vegas Sands is doing a couple of things right. Okay. There's a low, higher low, equal high, higher low, higher high. And you had the gap. It's what's trying to fill right now. But it's got the capability of running up to here. Now, it reports on the 23rd. And I think there are some people who are thinking that the earnings report's going to be a little bit different than it was before. All right, let's go look at the EMAs. It looks like it's trying to change character. 23rd, and we're looking at the 9th. You probably got a couple of weeks. You might have a trade in here, but it's a little gappy. Gap here, up and down. So I think Las Vegas Sands and MGM both have a lot of exposure to China, Macau. So be careful. That could be what's causing all this. I'm not sure about the fundamentals. So you might want to think about that. MGM. Okay. Las Vegas Sands we did. Still in. Okay, thanks. Da-da-da. JJ wants to sneak another one in on ECA. It's starting to bottom out, but this is a bottom fisher. Moves 3%. Moves 17 cents a day. Unless you're going to buy 20,000 shares or so, I don't think you're going to make any money. Make enough money. There are others that are better out there for me. But you've got overhead resistance at 475. You've got overhead resistance at 5 and at 525. Rick wants to look at Starbucks long. I had Starbucks and then I sold it ahead of earnings and it gapped up on me, but looks like it's pulled back. Let's look at a 3-day chart here. See how it's kind of consolidating here, and see how we've got a huge run up from about 60 or lower. So 60 to 100. Let's look at a weekly. The weekly does look like it wants to probably do a pop out of the box. Let's do this. On a closing basis, now let me go back to, whoops, daily. Yeah. It's just in kind of a trading range here. One thing that's a little disconcerting is that we're just about to get an 817 cross down. Unless we turn around pretty quickly, I'm going to get a cross here. It's not the end of the world, but it's an indication that good stocks shouldn't be doing that. All right, last one here. Workday short. Oh, why didn't we get Workday on the breakdown below the 200? Now, we lost the 50 here and the $204 level. Excuse me. It kind of bounced, fell all the way down to the 200 and kind of wobbled a bit for a couple of weeks, maybe for a month, and then dropped. We've got support right below here on Workday, but we could potentially drop to the 140s or even the 160s. Let's see what you're looking at. Let's keep an eye on it this week, okay? Okay. All right. Thank you very much for everybody for coming out tonight and sticking around. And I hope you enjoyed it. Please, please, please consider joining the room. $25 a month is a steal. I will be here for, I think, the entire weekend, every Sunday for the month of October. So you'll be seeing me in about 6 of the next 8 weeks or so. So you'll have to put up with me. But anyway, thank you very much. You guys have a wonderful week. Be safe. Be smart. Aloha.